Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's get a look at some stocks on the move today with Bloomberg's Isabel Lee.
Hey guys, we're looking at CrowdStrike first. So ticker there is CRWD. We see shares falling by around 7%. So that's after the cybersecurity company posted disappointing first quarter subscription revenue. So its second quarter sales forecast also underwhelmed, while an unchanged view on the full year revenue was seen as negative by some analysts. We have Evecore, Canaccord downgrading the stock. So CrowdStrike declined despite really beating earnings expectations. And again, we see that investors are more focused on the forward outlook. So the company also reported annual recurring revenue for the quarter that was just in line with estimates. And of course, in May, recall that CrowdStrike announced that it would cut about 500 employees. And at that time, shares dropped because Wall Street questioned whether the company's move came from a place of weakness or strength. So sometimes you feel like you just really can't please these investors.
Well, ain't that the truth? Interesting, too, because cybersecurity feels like a resilient place within the economy, but maybe there's some individual issues there. Okay, let's also go to, where am I? Dollar Tree. This is so interesting because the dollar stores really diverge on this.
Exactly. So Dollar Tree, DLTR, not to be confused with Dollar General, which is DG. We're talking about Dollar Tree. Shares are falling almost 10% because we have the company warning investors that second quarter profit could be down as much as 50% from a year ago. And that's, of course, related to tariff-related costs. So we have Dollar Tree saying that the timing of expenses will weigh on adjusted EPS. And that includes a 145% payout on levies because they have a lot of products coming from China. So Dollar Tree said they expect profits to, quote, re-accelerate in the remainder of the year. But still, the outlook, to Alex's point, really pales in comparison to its rival, Dollar General. Because on Tuesday, the stock surged to the most on record after raising its sales, profit, and guidance. So both are dollar chains, but they're different because Dollar General generates around 80% of sales from food and consumable goods. So this means that they're less reliant on imports. Dollar Tree gets just half of its revenue from these categories, making them more reliable on inputs. And add to that, most of their majority of their directly imported products are imported from China. And we know what's happening there in the tit-for-tat trade war.
All right, what else we got? Snowflake, what do you got there?
Snowflake is a different story because we're seeing some green there, but really just 0.5%. The ticker is SNOW, S-N-O-W. So the stock is rising after UBS raised the stock to buy. They say that the company is early in the multi-year data investment cycle. So the price target is now $265. That's up from $210. They also had a big summit. And from that event, UBS said that they're becoming increasingly confident in the prospect that we're just a few quarters away for this whole multi-year enterprise. Evecore also said that there were no major financial updates at the event. Yes, but it's clear that AI has hit a tipping point. And TD Cowen also had good words. They said that Snowflake is leaning into an accelerated product roadmap. So lots of good words there in the summit, which is, I guess, the best news you can ask for when you hold one.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.